What's going on, everybody? My name is Hunter, and in this channel, all we do is talk dividend stocks, dividend investing, and making passive income with your hard-earned money. So in this video, we are doing a portfolio reveal. We'll be looking at how much money I have within my M1 Finance portfolio. We'll talk about all my holdings, where I see this portfolio going, and my kind of investment goals, different things like that. And from now on, we will be doing a lot more portfolio updates, just kind of saying how my portfolio did over the week, month, different things like that, talking about my estimated dividend income. So we'll look into a lot of different things. But before I go any further in this video, I'll ask if you find any value and if you enjoy this type of content, make sure to subscribe, turn on post notifications for videos coming out every other day, and leave a comment below what you think about this stuff, what you think about my portfolio. I always like to see what you guys are doing, what you guys are thinking. Now let's get into this video. So as we can see, my portfolio right now is sitting at $10,000 and $10,009.39. It is down $77 today, down 0.77%. Over the past week, I am down 1.8%, down $187. And over the past month, I'm up $8, but actually market gain, I am down by $10 and I've made $19 in the past month from dividends, and that is what is carrying my portfolio for the past month, up 0.1%. Now the past quarter, I am only up 1.48%, and this has been a very wild quarter. We've seen many different spooks within the market, Omicron, different things, the Federal Reserve taking action, inflation concerns. The market is a very interesting place right now. And so my portfolio is, I'm saying only 1.4%, and I'd rather be up $112 rather than none. But I started this dividend portfolio not too long ago. I started it back in October, about when I started this channel. Now, I've been investing in the market for far longer than that, for years longer than that. But what I've been doing for the past few years is kind of only investing in either high growth potential stocks or ETFs. Now, I remember when COVID happened, I deployed a lot of cash that I could into just different stocks that I thought were going to rebound. And that's kind of what caught my attention for more growth. Because at first I was just investing in ETFs, not really interested in the market. And then I started getting really interested, and I started getting COVID. And then I made all these gains on these stocks in the bull run, and I started making money in growth stocks. And now I do have a TD Ameritrade portfolio with roughly like 15,000 in these other growth stocks. And I'm looking to slightly sell them. Now they are down at the moment. I think that it's not the right time in the market to sell these stocks. I do have high conviction within those companies, so I'm waiting for the right time to sell. And when I sell, I'll slowly deploy this money into my dividend portfolio and other investments and ventures that I have going for myself. But I do really want to keep building this dividend portfolio to build a source of cash flow, which it already has proven to do so. Now let's talk about my holdings within this portfolio. We'll see I have tech and cloud computing, income fund, consumer and stores, banking and fintech, real estate, and restaurants and food. I want tech and cloud computing to be my biggest target. Now these are a little unbalanced because whenever I started, I had different weightings in my portfolio in the pie. But as I'm buying more, it should be getting more tech and more banking and fintech. Now, we're going to be getting also some more restaurants and food, but a little bit less of real estate, a little bit less of consumer and stores, and a little bit less of income fund. So here is what we're looking at. My tech and cloud computing, I own Apple, Microsoft, Broadcom, ticker IGV, which is a tech ETF, and NVIDIA. Now, I have my biggest percentages in Apple and Microsoft equally shared. I'm up on Apple. I've actually owned Apple for a longer time than Microsoft. I've owned Apple for like, I don't even know, a year and a half now, if even that. But I've owned Microsoft since I started this portfolio, Broadcom, IGV, and NVIDIA. Now we'll look on the other income fund. This is more high dividend yield ETFs with low growth, I guess you could say. But what we're looking at right now is SPHD, which I have been invested in this one for a while. I've been invested in this ETF for like 3 years now. And the reason that these gains are a little bit offset is because if I had these in my TD Ameritrade account and I transferred them to Fidelity, and I wasn't a fan, and then I transferred from Fidelity to M1 Finance. So they're not going to show my all-time gains and returns, but I have been holding SPHD for a while, and I'm not looking to buy any more of it. It's not that it's a bad ETF, but I just would rather put my money in more growth. And I have a lot in XYLD, which is a very high yielding dividend ETF, like 11, 10%. And I think it's good for me to have some money in there, but I'm going to kind of slow down on putting money into the income fund ETF slice of my portfolio just because I'm aiming for more growth on my investment horizon. I'm looking to have this portfolio being able to cover my living expenses within the next 5 to 10 years. Now, I can't guarantee when because of market and the volatility and everything like that, but I'm looking for more growth to get my yield on cost looking far better. Now, in my consumer and stores fund, we have ticker MO, Home Depot, Lowe's, and Costco. I'm looking to buy more Costco at the moment. I really do believe in this company. Trimming my position in All Share Group, I think it's doing really good. It has a high dividend yield, but I think that the market is going to be tending to grow towards these three more so, and I want that growth in my portfolio rather than high yield and cash flow at the moment. Now, banking and fintech, I do believe that these four stocks, especially these three in general, will perform very well over the next 2 to 5 years. I say that just because of the different policies that are happening right now, and I really do believe that Toronto Dominion Bank, they're my favorite financial stock that there is. I believe in the upside potential, and even if I'm red on any of these stocks, like I'm down almost 10% on JP Morgan Chase, I could care less. Like, I'm in this for the long term. I don't plan on selling these for a long, long time. These all provide pretty good dividend yields, except for Visa. Visa is one that I am considering just completely cutting out of my portfolio. There's been a lot of different talks about the practices that Visa is doing within their company and how it's immoral, and I don't want to be invested in a company that's not bringing as much value as they truly can to the market. Now, we'll talk about real estate. Real estate, I own 5 different companies: Vici, Realty Income, Alpine Property Income Trust, Store Capital, and MGM Growth Properties. Now, Vici and MGM are about to like kind of merge, so this will become one stock. I want to say, I honestly completely forgot the deals, but I want to say Vici holders are going to be getting MGM shares. No, MGM holders are going to be getting Vici shares. That's how I believe it's going to go. Correct me on that if I'm mistaken, but I know that they are merging together, and I do believe in the potential. And my whole real estate portfolio is almost down, except for Alpine Income Property. And I'm just buying the dip. Like, I don't see any potential of these people crashing. All I see is upside potential. I really believe in Store. I really believe in Realty Income. So these are my two highest conviction ones. I would say I really believe in Vici too, but they've been performing pretty poorly recently. So they've been giving me some just watching on my eye. Now, let's talk about my restaurants and food, which is literally just Starbucks at the moment. And I believe Starbucks is a really good dividend growth stock. I believe that the upside potential is way there, and they're not going to go out of business anytime. People love coffee. People will pay these huge margins for Starbucks to get on these coffees. So I think that the upside potential is definitely there for a Starbucks stock. So that is my dividend portfolio. Now let's get into my dividend income estimates for the year and just kind of my whole yield on cost of my portfolio. So my dividend yield right now is 3.4%. My yield on cost is 3.51%. My annual income is estimated to be $345. Now, this is all numbers if I just like sat around and did nothing. That's $345 a year that I'm getting for literally doing nothing. Okay, my portfolio's beta is 0.94. And I know it might sound a little crazy, but I do want my portfolio's beta to be above 1. And I want that because I want that volatility and I want that growth potential. And the reason why this is lower is because at first, whenever I got into this dividend investing, I don't even know what I was thinking, and I did not even think twice about like, oh, let me think about my time horizon. You know, I kind of was like, oh, I just want the cash flow right now, but like, I'm a young investor, and I don't necessarily need the cash flow right now. I need the growth so that in the future, I do have the cash flow and great yield on cost. You got to invest according to your time horizon, not somebody else's. So I bought a ton of XYLD. I had a ton of SPHD, and these are kind of carrying down my beta, which is not a bad thing. But for my investment horizon, my investment timeline, it's not what I necessarily want. Now, looking on this, my dividend portfolio, you can just see December expected $26 in dividends, and then next January I'm expected 43, and then 18, and then it kind of just same thing for each quarter. So usually the first quarter of the year is my biggest, the first month of the year is my biggest, the first month of each quarter, is the biggest, and then the second month of each quarter is the smallest, and the third one is the second biggest. So that's pretty good. I really like to see this stuff, and I'm excited to see where this portfolio is going to go over the long term, just looking at different things like this. So if you did enjoy this video, make sure to subscribe and turn on those post notifications videos coming out every other day. Gonna keep you guys updated with my portfolio, all that good stuff. Thank you so much for making it to the end of the video. Use M1 Finance if you'd like. Use my link. You can get access to this portfolio, and you can use the link and get a free $50 by signing up and depositing $100. But that is all I got for you guys in this video. So if you enjoy it, yada yada, you know how it goes. And thank you, and I will see you at the next video.